So in these 3 videos I'm going to be talking through the very beginning of the course. We're going to look at the nature and the purpose in particular of a business. Why are they created? What are they for? Then we're going to look at the different business forms and the difference that makes to how a business is run, and then looking at the external environment and how that interacts with the business. So to begin with, very broadly speaking, you will probably come up with better and more reasons for why businesses exist, but broadly to an economy, to our economy, the reasons why we encourage business are to provide employment, to provide growth to the economy itself, and to provide innovation and to create new things which will be better than they were before, hopefully. And what do businesses do? Well, overall, they transform goods. Inputs are presented to a business. They then transform those inputs and they are repurposed, if you like, into outputs. And in doing so, value is added. So the value of the output is more than the value of the inputs. It's important for you to understand the different sectors that businesses can exist in. So the primary sector tends to be producing raw materials such as mining and steelwork. This was at one time a very major industry within the UK. But when cheaper imports could be produced, the country moved away from this. We previously also had a very strong secondary sector, and the secondary sector is the manufacturing sector. And in the 1950s, 60s, 70s, we were seen as a very strong manufacturing country. But over time, with other countries producing goods and manufacturing more cheaply, politically it was decided that it would be a wise move for the country broadly to move towards the tertiary sector. That is the service industry. That includes the financial industry and things like call centres, industry, things like that. One of the reasons for this is that it was considered, or it is considered, that the tertiary sector requires, or the tertiary sector can make use of a better educated population, and I think the politicians of the 1980s and onwards considered that our population was well educated, and so would make particularly good use of the tertiary sector. Whereas in manufacturing it was perhaps considered that a population that did not have such a strong education would be able to produce goods more cheaply. Any company, when it starts, should have a mission. That means it should know broadly where the whole company is going, or more to the point with the mission, what the company stands for, what it represents, what it should mean when others see it, and when others use the company, what they should expect broadly from that company. It can often include emotive words, and will often mention who the population are, who might be interested. So, for example, in this case, Disney, happiness and all ages, to show what it's broadly doing. Notice it's very broad. You really have no idea from that if it's a book company or a film company or a television company or a disco, but it broadly gives you an understanding of it. Beyond that, we narrow the company down, and a company should, at different times, produce corporate objectives. Those objectives are the reasons or the expression of what would be decided as success for the whole business. So it's not for separate departments. It is over a period of time, perhaps 1 year, perhaps 2 or 3 years. How will the company measure itself broadly as successful? Then, within different departments and over the year, you will look at marketing, finance and accounting, human resources and operations. Each of those departments will have their own objectives, what each department expects to do and achieve over a certain time period. Remember, objectives must always be, and I know it's a cliche, but they are helpful if they are specific, measurable, agreed, realistic, time-bound. With your work, if you say I will do some revision, or if I will do an essay or part of an essay, you don't know how much, you don't know when. Therefore you may leave it and leave it and leave it, and you also don't have an idea when you have achieved as much as you wanted to, when you have succeeded. Whereas if you say, I will write 200 words of an essay by the end of tonight, then you will know you will be able to tick it off if you've achieved that. So that's why it's very important to make smart targets. They are a cliche, but they really are important, and they do genuinely make a difference. So we have some common business objectives. I won't go through those, but they may be, you can see those yourself. They can be very, very varied depending on the company. Very often what we think of as a success in a business is profit. And yes, profit can be important and usually is important, but not always. How do we measure profit? We look at the price that we are charging, and we will look at that in marketing. We also look at how much money we have made, how much money has come in, or turnover, how much money has come into the cash tills. And the way we can work that out is if we charge a particular price and sell a certain quantity, that will give you your revenue. And there's our first calculation that we need to remember. So there's your revenue, but of course you need to take from the revenue, the money that came into the tills, all your costs. Costs, as we'll see as we go through the course several times, are broken into your fixed costs. Those are costs that are bought once and generally don't change no matter what you're producing. There are obviously, if you jump your production by a huge amount, they will move, but broadly you buy a building, and whether you produce 1 or 500 of something, they will cost the cost will be the same. Variable costs, as you recognise, vary, so every individual item that you create will have an extra cost. The tins that you use to hold the beans, and the baked beans themselves, and the sauce, the more you make, the more of those costs you will incur. And those put together provide your total costs. So what you need to remember broadly, and we'll come back to this later, is that when you put the price of something up broadly, and there are calculations we will do later, the demand will go down. So you have to be careful when putting the price up, but that all depends on the type of market it is and the type of product you have. Profit is overall very important. Although profit is not required from day to day, and when a business is starting, there are other objectives that may be more important. It is vital over time that a company makes a profit, and the profit is used then to support the business in its growth. So over time, not all the time, but over a longer period of time, profit is absolutely vital, but not in every situation. Cash flow very often can be more important, particularly at the start of a business. And finally, when you measure profit, it can be quite misleading if you just look at the raw figure itself. So what we will do later on in the middle of this course, and later on as we go into the second year of the course, is we'll compare the profit from one company to another, or the profit from 1 year to another, because that's much more information, much more useful information, and we'll use margins, profit margins and other margins to calculate that, to make it easier to compare.